Welcome. Today's the 9th of September 2016. I hope everyone is doing just perfect today. What we have is a 30-minute regional equity indexes from the Americas to Europe to Japan with their respected currency, as well as a 5 and 10 government yield, 5 and 10 government bond yield. Let's start and look at the Americas. Let's look at the U.S. and just understand what happened in the pre-U.S. cash session. When I say pre-U.S. cash session, what happened 30 minutes into the U.S. day, into 9/9/2016? And we saw the U.S. Treasury, we saw a bond sell-off, a global bond sell-off. And we believe that started in Japan, and it trickled from Japan all the way over to the U.S. as well as Europe, and we'll get to Europe in just a second. Along with that, we've seen a Draghi that disappointed the market in the prior session, rate hike probabilities in the U.S. increasing on the session, which added a double whammy to the market with the dollar appreciating and really putting a resistance into commodities. So we see yields and the dollar to the upside in a parabolic move in the pre-U.S. cash session, and really going forth in the U.S. cash session, enabling the selling of the U.S. equity index, the SPX 500. Heading over to the right, and since the dollar and euro are inversely related, we saw in roughly the 6 a.m. time frame a sell on the euro USD, sending it to the 1.12 level, probing in that low 112 handle, along with the German DAX, sold with the currency, sold with the euro USD. In pink and blue, just in that time, bonds or the bund sold off, and we saw the 5 and 10 yields increase in a very dramatic fashion, very similar to what happened in the US. Bottom left of the screen, we put Brent oil, FTSE 100, the sterling, and then the 5 and 10 of the UK. So what we saw once again is the currency sold, the sterling, oil sold as well, and then the 5 and 10 in a blue and a variant of blue appreciate in a very parabolic way. Now, excuse me for Japan, but for some odd reason, the feed's not coming in, so we'll excuse that. But the chatter was that the epicenter of this global bond sell-off, or the developments in creating it, stem from the BOJ. Over to the right, this is gold and silver. So very interesting. In the 9/7 time frame, gold found a resistance level, dollar found a support, and we're seeing the currency, the dollar, and we're seeing gold come in, and it looks like we'll start seeing some type of bracketing with this crossover. And what that could mean is that with this bracketing, as the gold sells and the dollar bids, there could be a major move and a major dominance in a specific player, and it looks like it could be the dollar. So we'll see, we'll watch, and especially pay attention to rate hike probabilities. But we're seeing a change of tide, that the dollar has been appreciating ever since Draghi and the policy error that he made with the unchange, as well as the Fed continuing to speak and the rate hike probabilities continuing to increase in the late week. Let's hop over to the next tab, and top left of the screen, it's a daily time frame of the SPX 500, oil, and long and short dated UST yields. And what we see, the trend throughout the fiscal 16 year, is a hunt for yield. And we're seeing that with yields negatively diverging from the SPX 500 in the mid 1Q time frame. Now in the early 1Q time frame, right after the rate hike, we saw the yields, we saw oil, and we saw the SPX all liquidate in tandem. Now what we're seeing are the yields bottoming in the Brexit period, and oil is in an OPEC news cycle, so it will do what it wants to do. But we see yields bottoming after Brexit, bracketing after Brexit, and then now rapidly accelerating in an upward trajectory into the September timeframe. And we look up and we say to ourselves, wow, what are some symptoms of the global bond selling, the UST selling, the treasury selling? And we see that the spillover is in the SPX 500. We're going to excuse JPN 225, but with the data we have here on the Nikkei, we can see the disconnection of the USD JPY with the overall market. We can see the JP10 yield as well as the JP2 yield appreciated along with the Nikkei. So that's interesting to note, and that's some of the chatter in the overnight session that could be originating from this global bond sell-off, is that the BOJ was trying to boost the yields. So we'll see what transpires and more developments over the weekend. Here's Europe. So this is Europe. This roughly we have the DAX and the FTSE. So it's the German equity index and the UK equity index, along with just 10-year yields from Spain, UK, France, Germany, keeping it very simple. And what we're watching is how the equity indexes are reacting to this bracketing after Brexit of the yields, the bracketing, and then this rapid acceleration to the upside. So that is something that we want to keep a close eye on. And if a spillover does occur in the EU equity indexes, and then here is across the globe from the US to India to EU to Japan and anywhere else in between, it is a hunt for yield right after and before Brexit, bracketing through Brexit, and then now a selling of global bonds inversely sending or skyrocketing the yield. So that's quite interesting that we're seeing not just bond selling today on a global aspect, but we're seeing equity indexes, and that's very interesting to note. Anyways, guys, thank you and have a wonderful day. This was just a quick view of perhaps a commodity, a currency, equity indexes, and most importantly, we're just looking at and trying to comprehend the developments that are starting in the global bond selling. Thank you and have a wonderful day.